Alrighty, guys, we should be good to go here. Good to see everybody. Hope you had a good week here so far. And we'll jump in here to the March 3rd. What are we calling this? The Thursday meetup? The March 3rd Thursday meetup. But we'll dive in here, guys. I don't want to keep you for too long. I got to hit the road and take care of a couple things here at home. But we will touch on, I think, a few of the things that really matter here. So in terms of today's price action, I mean, pretty sloppy stuff, really. So your S&Ps and your QQQ, we get the rally back to the 21 EMA. Pretty good rejection here today. So the S&Ps, they're down about 0.5%. So nothing all that big, right? But the S&P is down about 0.5% today. The Dow Jones pretty much flat on the session. The IWM down about 1%, 1.25%, we'll say. And the Qs, they pretty much got the Qs got the worst of it today, down about 1.5%. So if you look at the S&Ps or you look at the Qs here, we get the big flush. Everybody down here kind of gets trapped short. Everybody panics a bit. You get your bear trap. You get the short squeeze. With negatively stacked DMAs, with the red 10x bars in the bearish weekly squeezes. Because keep this in mind. Get a bearish weekly squeeze on the S&Ps. Still building up energy. Hasn't fired just yet. You have a bearish weekly squeeze here on the QQQ. Already firing. Bearish weekly squeeze for the small caps already firing. And then for the big Dowski here, bearish weekly squeeze that hasn't fired yet. So not the best looking backdrop. And then on the daily charts here, you still got the sell signals. With that weekly squeeze and the bearish daily structure, yeah, it would make a lot of sense here that we get the flush, trap all the shorts, get the short squeeze. Pretty much you just revert back to your 21 EMA. And then you kind of look for things to roll over again from here. So certainly possible. Certainly possible that's all she wrote as far as this oversold bounce. And you could see the S&Ps, you could see the Qs, the IWM, pretty much the whole kit and caboodle here. Start to puke it up pretty good. But regardless of the rejection, we're still trapped in a box here. So I'm going to give you a few levels to focus on tomorrow, a few levels to focus on next week that I think are going to be important. And they've definitely been important this week. So if you look at the S&Ps, you've pretty much got your clear resistance here around 440. And there's a lot that lines up here. It's the daily 21 EMA. It's a big psychological number. And if we flip to the hourly chart, pretty much here, the ebb and flow of this move to the downside since we broke back in January has been to flush, rally back towards the hourly 200, flush, rally back to the 200, flush. And you gave that a quick smooch here this morning. So you got some pretty clear resistance here at 440. And then to the downside, you got your January lows and kind of, the spot where they stepped into save it a few times this week, 430. So there's a lot of emotion here. Right? You get the big dramatic fades, you get these big dramatic pops. They're not going anywhere just yet. Now you take the structure here, that rejection at the 21 EMA, that might be all she wrote. But we're not going to get any meaningful flush to the downside if we can't break through the January lows. So we got that weekly context, bearish weekly squeeze. We've got a daily chart that still has sell signals and negatively stacked EMAs. So it's not the prettiest, but we're trying to get a sense of where do we go next. Does the market got to squeeze more shorts and we get a rally up to the daily 200 before we can really roll over? Or is that all we got left? And we roll over from here. A break above that level probably takes you into the upside a bit more. In a break below the January lows, I think things get pretty ugly here. So we've got some levels, we're stuck in a range. I think the best thing to do, and we can just look at the index futures here. And this is all stuff we can keep an eye on tonight when the futures open up in an hour or so. You want to find a couple of squeezes, right? If we're trying to get a break through 44, or we're trying to catch that flush under 43, but we're just chopping back and forth, go look for a few squeezes. And in this instance, you have basically a squeeze everywhere. 4 hour, 2 hour, 60 minute, 30 minute, 15, and a 5. Let's check a few of them out. Let's see. 30 minute, the hourly. Get the 2 hour squeeze there, and you got the 4 hour. So what we're going to look for here is kind of that domino effect. Say for conversation's sake, tonight the 15-minute squeeze fires short, then the 30-minute squeeze fires short, and then that triggers the hourly, the 2 hour. If you get 3 or 4 squeezes, just kind of firing one after the other, that could, release enough momentum here to break us through that low. So if you're bearish on the market, you're going to look for all those squeezes to fire short and take us through 4,300. In the instance you're bullish on the market, it's just the opposite. You're trying to get that 30-minute squeeze to fire long, and then the hope is, could that 30-minute squeeze wake up the hourly squeeze? And you got the 2 hour, the 4 hour, the daily. But I think into tomorrow, and maybe we'll see how tomorrow goes, but into tomorrow and into next week, those are the 2 levels to focus on. And I think a bunch of squeezes here kind of makes our jobs easy to gauge in the next move. If we can test support with a bunch of squeezes firing short, we might break. And if we can actually break out here with a bunch of squeezes firing long, we might get a pretty good push. For now, though, it's a whole bunch of back and forth that doesn't give us too much to work with. Take a look here at the Qs, guys. It's basically the same thing. You've got your 350, you've got your 340, and if we can get a convincing break through the 21 EMA, I think you got a bit more upside before things really roll over. If we can break those January lows, I think it's lights out for QQQ. So we got 2 levels, and we got a whole bunch of squeezes here. So same thing. Into tomorrow's session, watch that 30-minute squeeze, because if that fire is short, that might trigger the hourly squeeze. And at that point, you've built up a lot of momentum and energy. And if you start to release energy at the same time you're breaking through a key level, that's what can lead to these nasty flushes. Same thing to the upside. So pretty basic stuff, right? We got the bigger picture context. Monthly squeezes are done and over with. Weekly charts are bearish, right? The weekly charts are actually just the polar opposite of your 2021 trend. So you got a whole lot happening there, and we got some pretty key levels on these daily charts. So it's a market that could go either way. Just in terms of like ebbs and flows and all that good stuff, it would certainly make complete sense here that the Qs and the S&Ps and everything else just kind of rolls over from here. If we can break above, though, I think you got a little bit more upside. So a few key things to focus on there that should set the tone pretty much for everything. Look here at the volatility index. You still have buy signals. We got the histogram building momentum. VIX continues to look bullish. So where you really want to pay attention to this, it's kind of in basically the spot it's in right now, right? Because we all understand the relationship here. As you get that big push to the upside in the VIX, you're going to get that flush in the market. But then as the VIX kind of cools off a little bit, basically there's the green light for the market to try to get something going to the upside. And then the VIX spikes, everything rolls over. Back and forth we go. So as the VIX kind of comes in here to that 8 EMA, right near that 21 EMA, make sure you're keeping a close eye on this. This starts to rip back through 33, 34. You should be looking for your market to puke it up. So make sure you keep a close eye on the VIX. You've got a few key, but I think super important levels here that pretty much kind of set the tone for everything in the indexes. And that, guys, I think pretty much covers all the bases as far as what matters most right now. Because, for example, I got a short position yesterday in Uber. Shorted Uber back there, caught that flush. It was shorted again up here. The reality is, you're short in Uber, maybe you're short in Amazon. They're going to follow the indexes. Primarily, they're going to follow the S&P 500. So the timing component here, a nice short on Comcast. We caught a nice short on Nike. Caught the short on Uber. What these shorts all have in common is you're jumping into that short position, and then you're getting the market flushing behind you. So as we're taking profits on Uber, on Nike, on Comcast, guess what the indexes are doing? They're giving you that market-wide flush you need. Last 5 or 6 days here, the indexes bounce. So what happens to Uber? Bounces with the market. What happens to a Comcast? Bounces with the market. So that's the timing component right now. We run the scans, there's plenty of things that look shortable. But the reason the S&P 500, I think, is the most important chart is a general statement, everything's going to follow this. So you're short Uber, Amazon, Nike right now. If the S&Ps and the Qs come and wipe out the January low, and we never look back, you're going to be probably in great shape, basically. I don't want to say short anything, but you get where I'm coming from. If you short something that has a sell signal, right? If you short something that has that bearish criteria, and then you get your indexes flushing right behind you, you're in great shape. So that's why that S&P chart is so important. Because as shortable as Uber looks, we're going to take a look at a few more here like Adobe. These completely fit the bill for a good short. Get the sell signals. It's basically right where we'd want to short it. But what's going to happen if tomorrow or Monday, the S&Ps are back above the 21 EMA? They got to squeeze out some more shorts. Everything's going to bounce with it. So just keep that in mind. Where the short side starts to get really fruitful here is when these indexes can break that low. To the extent they get back above the 21 and they got to grind a little bit higher, kind of expect most things on the board here to grind a little bit higher as well. So to me, that's a number one chart. All right, we talked about the key levels here. We looked at the squeezes on the futures, and not just the futures, right? The ETF as well. Makes our jobs pretty easy. If that 30-minute squeeze fires short, kind of sitting back watching that hourly squeeze, if that starts to fire short, next thing you know, you got 2, 3, 4 squeezes just teeing off to the downside. That kind of release of energy can get you under support. Can also get you above resistance as well. So important stuff there, guys, bigger picture wise. And then in terms of the IWM, you're pretty much in this phase right now where you get the flush, right? Nice, nasty flush, but then we go into the consolidation phase. Build up of energy, then you get the release of energy. At this point here, you're pretty much right back into that consolidation phase. So I would expect, even for the IWM, you want to drill into the S&P 500 right now. You take that bearish weekly squeeze, you take your sell signals, your negatively stacked DMAs, bearish weekly squeeze. The S&P can't hold up and that rolls over, that's going to go with it. Vice versa, your Qs break out a bit, your S&P breaks out a bit, they got another 3, 4, 5 days to the upside. You probably get the same here in the IWM. And I would like to short it again up here at 210. That's kind of the question. Do we get that shortable bounce? Well, that's basically going to come back to the S&Ps here. We break under 430 and roll over, you're probably not going to get that shortable bounce in the IWM. Right now, it's very much in the consolidation phase. So during this phase on the daily chart, what you want to anchor to is that weekly. Because notice how that last daily squeeze had the same weekly profile. There's a daily squeeze under the weekly moving averages, negative histogram, moving averages sloping lower, no stacked DMAs. You look for that daily squeeze to fire in the direction of that weekly structure. So the big question here is, do we get a bounce first? And then I think the second big question is, does this trade sideways for another 2, 3, 4 weeks, or do you kind of get that roll sooner rather than later? But that's a major thing, right? Huge short squeeze, right? Whole lot of back and forth here. There's huge ranges on an intraday basis. So we'll be up or down like 2% and going nowhere. Yet none of this has changed anything. And you still see it across the board in a lot of spots that matter, right? Like the financials, for example, it's just not pretty. It's not a bullish daily chart. If you check out the semiconductors, right? So your NVIDIAs, your AMDs, it's not pretty either. That's getting the rejection at the 21. XLK. So we'll be up 2% one morning. We'll be down 2% the next, right? Huge back and forth. Not only are we not going anywhere, trapped in the box, it's not that we're just not going anywhere. Nothing's changing either in terms of structure. But a few names I want to cover here, guys. So one that I think is interesting for a potential short is Amazon here. And basically, you got a bunch of, bearish squeezes setting up. Monthly, weekly, 3-day, daily, all over the place. But if you check out the weekly chart here, and keep in mind, Amazon's going to follow the Qs. So if the Qs in the next 3, 4, 5 weeks here make a brand new low, what happens to Amazon? It's going to do pretty much the same thing. So two bearish weekly squeezes going hand in hand. You have the bearish weekly squeeze, and I kind of like the timing for an entry here. Right? You got the initial flush. You got the full reversion to the mean. Now, this is why you got to pay attention to a weekly chart. Because if I was paying attention here, I would have been short 4 weeks ago. Sitting on some nice ass profits. But I still think we got time here. You get your rejection at the weekly 21. So Amazon had the opportunity to shift everything in the bull's favor. Completely failed. So big rejection, big failure. This is week number 1, where the weekly squeeze is finally firing short. And mind you, we're coming out of a long consolidation here. So there's your weekly structure. And now after this failed rejection here, you got this thing kind of coiling up in a 3-day squeeze. And you got the daily squeeze. And you got the 4-hour and a few time frames underneath it here. So I think Amazon is one to keep an eye on to the downside. What happens to Amazon if the Qs rally like a bat out of hell here, and they got to come squeeze shorts a little bit more? You're going to get a bounce in Amazon. But if we're thinking 2, 3, 4, 5 weeks down the road, if that low gets wiped out, and that weekly trend continues to trend lower, you look for Amazon to do very much the same thing. And I'd look for a move down to the recent low. If that can't hold, I'd look for your weekly 200. So 2,700 to 2,625. All comes back to the QQQ. The reason I like it, though, is just it's a massive buildup of energy. It's like a grizzly bear in hibernation. Finally, potentially waking up here. Let's just check the monthly chart. Wow, this is interesting. This is actually really interesting. I'm not sure I've ever seen a high compression monthly squeeze. I'm sure I have. Put it this way, Amazon is, at least in the last 20 years, hasn't had one. Very interesting. High compression monthly squeeze. In plain English, you really can't build up much more energy than that. Also in plain English, it typically is a pretty big move around the corner. That's actually very interesting. I'm going to have to look at that a bit more. But the squeeze geek in me says, interesting for sure. So a high compression monthly squeeze, weekly squeeze firing short, and you got a daily here with the sell signals looking like it might do the same. But you got to anchor to the QQQ and the S&Ps. If these rally up and squeeze the shorts a bit more, there's technically not a reason for Amazon to buck that trend and just keep puking it up. So I like a potential short here on Amazon. That's something we're going to keep an eye on. Bit of a pricier name, but there's ways to do it. There's ways to do it and keep the risk in check. So I do like Amazon there. I was going to show y'all Uber. I built this list for us a couple days ago. Really can't suggest you short it at this point. So we jumped in here, I think it was yesterday, in the mastery, and we're looking for a bit more downside. We can get down to that recent low around $30. We'll probably get filled for like 50-60% return and move on to the next one. So these kinds of things, they're just basically rinse and repeat. Short the bounce, catch the flush, short the bounce. So in the event you get a big rip here, I think you look to short Uber. Next up is Adobe. Same thing. Negatively stacked DMAs. You got the rejection at the 21. You got the sell signals, and you got a 2-hour and an hourly squeeze. And I'd kind of look for these to fire short and take you back down towards the recent lows. Not to be repetitive, but in the short term, what happens to Adobe here if the S&Ps and the Qs got to rally a bit more? You probably get that pop in Adobe. In a blink of an eye, it's probably back at 415 if your S&Ps and your indexes take out the Jan lows. Let's just understand that relationship here. But I do like Adobe for a short. And then in the options gold room today, you put a short on Snapchat. Let's get the bearish daily squeeze, negatively stacked DMAs, and you got a beauty, if you're bearish, a beauty of a 4-hour squeeze here. So here's the levels that we're working on Snapchat. Looking for a flush into 30. Profit target of 30. And we're going to exit this trade for a loss on a weekly close back above the weekly 8 EMA. So $38.50, $38. So pretty good risk reward here. If you throw this into the, did I grab it in here? I think so. Yeah, I got it in here. If you look at the position that we took, just in terms of risk versus reward, I got that here. Into next Friday, into 38.50, going to lose about $400 and change. And a flush into $30 would net a little closer to 700. So it's not quite risk one to make two between those two levels there, but pretty good numbers. And then for the Uber trade, I'll show you our levels there. We are going to look to exit this on a weekly close above 36. I think I took in here on one contract to track it. Yeah, we got it on one contract here. So per contract into 36, we'll exit it next week. $55 per contract would be the loss. A flush into 30 would net about $125. So in my book, good risk reward. Risk about 50, 60 to make 100, 130 and change. So I do like Snapchat here. That's where I take the exit, though. Weekly close back above the weekly 8 EMA. So I got Amazon on the watch list here. Got a position in Uber. I like that short the bounce kind of structure. So see if you get a bounce. Nothing for me on Adobe just yet. But I do like the idea of this continuing to trend lower. So keeping a close set of eyes on that one. And then you got Snapchat here. And then in terms of things to the upside, we did take profits yesterday on DWAC. So that was a trade from the options room. This has all kinds of good structure here. Weekly and daily stack DMAs. Get your green 10x bars. Pretty good little trend going. Doing a good job of bucking the overall market's trend. That's kind of what you're looking for if you're trying to get long right now. So any dip into 90 to 86-ish, we would look to buy that dip. So that is on the watch list for sure. And another dip we would like to buy is in Hershey. Not the most exciting stock, but one of the better looking trends. And you got the buy signals here. Positive histogram, bullish daily squeeze. If we could catch this back into 205, 202, would very much so like to buy the dip. It's kind of about it for the upside right now. Trying to get some Hershey, trying to get some DWAC, and you still have good looking structure and energy. So this much hasn't changed. So FANG is good looking. I think HAL is pretty good looking. That much hasn't changed. Energy and oil, they're going crazy here. So you got some good structure there. For everything else out there, it's still a bit bearish. So the buy the dip watch list is DWAC along with Hershey. And the potential short watch list here along with the indexes. Keep an eye on Adobe, keep an eye on Amazon. We got some Uber. And essentially anything that looks like this, you try to short those bounces. But it will come back to the market here, my friends. So, to me, that's what matters most tomorrow. Do we go into the weekend and we're closing above the 21 EMA? It just sets a tone for a bit more short squeezing before this market can really give it up. If we go into Friday, and I imagine it would start to get ugly, but if we go into the weekend and we're under 430, we get a close back under the January low. I think we're heading towards like 400. If we can't close on either side of this and we're stuck in the middle, it doesn't really give us too much to work with going into the weekend as far as context or clarity might be the better word. But that's what I've got for y'all here. Futures open up in about 30 minutes, so I'm sure we'll all be keeping a close eye on that here tonight. But a pretty volatile week here, right? Big ups, big downs. We're going nowhere. Trapped in a box for now. So guys, I got to head out here in a few minutes, but if you got any questions, let me just take a look here in the chat, and I'll try to go through as many as I can. Sorry for today being a little bit shorter than usual. Glenn, LMT. That's Lockheed, right? Yeah, that's just kind of beast mode. I mean, damn. Had the buy signals right there too. I mean, yeah, the easy move at this point kind of already happened. If you could get a dip to your AEMA, 430-ish, that might be the spot to try to buy the dip. A little bit extended, but yeah, this thing looks like it's got more room. Weekly squeeze. Yeah, so a little bit extended, but super bullish. So if you could catch a dip here, it's certainly a good spot. Certainly a good spot. All right, guys, let me run to the very top here. Yeah, so Integral Capital, depending on where the indexes are tomorrow, that's what I'll be looking for. Potentially a few call credit spreads on, the Adobes, the Amazons, and where I would like to do some put credit spreads would be that DWAC and Hershey. Those two fellas, they got to come back here a little bit. Got to bring it back a bit. Hey, what's up, Terry? What's up, Arvind? Yeah, Arvind, I agree. These it's just these days or these weeks where you get these like drastic swings every day, and come Friday, the dust kind of settles, and here we are. Same exact spot. Not the most fun, that's for sure. But you got UMP here. Wow, nice move today. Nice move here today. Try to get in that breakout. I mean, you got a pretty clear level here, so it makes it, yeah, it makes it all pretty straightforward. You did come up here today and put in the new high, but you do get that close right back under your previous high. So you have the weekly squeeze, you have the 3-day squeeze. It's coiled up here. Yeah, it's coiled up nicely. I would like to buy the dip, but my thinking would be if you get a close, if you can actually get a close above the previous high, because you couldn't quite get it here today, but if we can, I think everything starts to get triggered. Daily squeeze, 3-day, and you have the weekly. So a whole lot to like here. A very steady weekly trend. If you can crack through that and hold, I think you got a nice push coming. You've got the trend, you got the buildup of energy. The hold above previous resistance, that probably triggers the release of energy. Looking pretty good here. I like UMP. Hey, Arvale. All right, Rami's got some AMAT. So for me with the semiconductors right now, and it's not even so much a semiconductor thing, why do the semis look a little bit sketchy right now? Getting rejected at the 21, negatively stacked DMAs. It's just a result of the market environment we're in. And as far as AMAT, that's just a result of not only the sector it's in, because it looks like a mirror image of the SMH, just a product of the environment, so to say. But for AMAT here, for me personally, it could only be a short. If we can't get back above the 21, if we still got negatively stacked DMAs and some sell signals, I'd keep on wanting to short these bounces. And that probably changes if the semis can get it going. So if the indexes take out the January lows, then the semiconductor sector very likely does the same thing, and then AMAT's just going to follow suit. All right, guys, go through all the questions here. Yeah, Tim, I think scalping right now or just picking your spots wisely, with a crap load of patience for sure. Because you're making a really good point. Where if you're gonna swing trade, well, look what the market's been here. Right? Swing trading essentially, especially to the downside, has been let the market basically screw everybody on both sides. Right? So rope people into calls, rope them into puts, just crush them premium on both sides, and they finally let it go. That's kind of where we're at right now. Everybody's swing trading. If you're short, especially, it's kind of like, well, where are we going here? And I'd imagine for day trading, it's quite the playground here. When we get those flushes, that's some pretty nice opportunity. The in between, never that enjoyable. Never that enjoyable. All right, guys, a few more here. Take a look at MU. Yeah, Micron. It it looks better than everything else in the semis right now, actually, which is kind of surprising. Yeah, better than Qualcomm, better than Broadcom, than Nvidia, than AMD. Give it kudos here. I mean, I think if you're looking for a long position here, it's just we have to at least take into consideration that's going against the grain of not the structure here, because this is good structure. So you're not so much going against the grain with Micron itself, but to get long here, at least for now, you are going against the grain of the structure of the group it belongs to. and essentially every other name in that group, and to a large extent the market as well. But I think you got to give it kudos. But with all that being said, it wouldn't be the spot where I want to jump in and take a huge position size. So I think we're looking for bigger risk on a long position. It's during that moment in time when here's a bullish daily squeeze in Micron. At the same time, there's a bullish daily squeeze in the semiconductors. And there's a bullish daily squeeze in the indexes. That's where I think you lean into a bit more size. At this moment, we don't have that dynamic. Micron looks like really good, so you've got to give it credit. I think if you're going to get long here, you just got to position size from this standpoint where you're at least taking into consideration. This is trying to buck the trend of, call it everything around it right now, which makes it impressive. But it's kind of like a kid in high school. Who you're hanging out with, who you're surrounding yourself with could ultimately kind of influence the direction you go in. So if that analogy makes sense, Micron looks like a good kid. Everything looks just fine here, but it's hanging out with the wrong crowd. This guy looks a little bit sketchy. He might be making some poor decisions after school. It's hanging out with this guy over here. That kid's lighting joints in the bathroom. So if that kind of thinking makes sense, take a stab at this. You just position size of that understanding. It's a good-looking chart that happens to hang out with some not so good-looking charts. Weird analogy, but hopefully that's helpful. So Kevin, in terms of Uber here, let me see what you got going. You shorted it on February 18th. Nice entry. Okay, so you got 318 expiration. So you should still have some really nice profits open. In my opinion, that flush into the 30th. And for what it's worth, you had like a 2 to 3 minute window to take profits. So admittedly, if I didn't take the exit like right away that morning, last Thursday, I'd still be in the trade. With that being said, if I was still in my same trade for my entry back here, I'd still be working the same target. So I would look for that flush kind of into that psychological 30-ish level. Just based on this rejection, I don't know if we hold on for new lows, but I think this certainly could take you back towards that 30. So for me, when I was shorting it back here, that was the target. It's also the target this time around, about $30 or so. Fuel those jets up. Yeah, so in terms of how I would go about structuring to put credit spread on Hershey. So here's the difficulty right now. It's not that I don't think this can trade higher. It's just that this current entry is not going to offer the risk reward I'm really looking for. And it kind of made the move here into the target. So where would I want to take an entry? Let's kind of figure that out. Let's call it 204. That kind of splits the cake between the 8 EMA and the 21. Right? So right back at the buy zone around 204-ish. That's where I'm looking for an entry. Now, in terms of risk, which is most important, where's my exit going to be? So the reason I'm looking at the weekly chart is in terms of like the stages of a trend, the quote-unquote easiest part of this move already happened. So the easy move, that crazy explosive move that lasts for week after week, That's typically going to be that big push off your weekly 21. Right? So in terms of context, where are we at in the stages of that trend? We're a bit more at like this point in time right now. We got the huge push. We're still holding that weekly 8 EMA. We're still trying to trade higher. But at this point in time, we got to remember, if we close under that weekly 8, there's a very good likelihood we're going to make that full trip back to the weekly 21. And ideally, that's where you're really going to load up. So that is a level we have to keep in mind, just based on where we're at here in terms of stages of the swing. So say that's at like 20, that's at 202. That's at 202, and where's your weekly 21? Weekly 21's down here at 194. So those are two levels on the swing trade I want to anchor to. Let's go with the weekly 21 as the exit. Right? So if that's going to be the exit, we're looking to build the position right here. And our target is, say, a move into, call it a new high, so 211-ish. Right? These are all the things I like to map out. So generally, I want to take a position at the 21, but here's why. Because if we take an entry right now, well, if my target is like 211, 212, there's not too much reward. And if I'm going to use an exit down here at 195, that's a long way to go. So the key is you find that trend, you find that structure, right? Get the buy signals, find the bullish squeeze. Then you got to figure out, right, at what point am I dead wrong here? At what point does the structure really start to change against me? For the sake of discussion, let's say that's a move under the weekly 21. So there's your line in the sand, there's your exit. 210, 211 is your profit target. So the reason I want those entries as close to the 21 as possible, that's the entry that's going to give you a good risk versus reward. Where the closer you can take your entry to your exit level, the less risk you have and the more reward you have. So that's where I'd want to enter the trade, right? But that's why. Risking a little bit to the downside, but I got a lot of room here to the upside. That's kind of why I like the Snapchat short today. So I'm selling a call credit spread. My exit is like a move back above 36. A move back above 38. But I'm looking for a flush all the way back down to that low. So hopefully this makes sense, right? Where do we take entries? Well, we take entries where, like with my Uber short. So say your exit level's 36. Your profit target's 30. Now the question is, where do I got to take an entry to make sure that between my risk of 36 and my target of 30, I'm risking less, so risking $50 to potentially make 130. So went a little bit off track there, but that's why I'm so hell-bent on give me that entry into 21. Because then I can have a good exit level and a good profit target and lose less into my exit level than I'll make if the trade works. So say we could get back down here to 204, 205, right? Just that neighborhood. I'd probably like to sell the at the money put credit spread. Because at that point, the at the money put credit spread, you can give it 30 or so days, probably have less risk to the downside than your reward. So hopefully that makes sense. Just check my phone here, guys. Check the time real quick. Yeah, I got to run. Listen, y'all, my fault for having to bail a little bit early here. I know we got a lot of questions I wasn't able to get to. Let's do this just so I can make sure we got all the Just take a quick look here at my schedule, see what the rest of the week looks like. What's tomorrow? Friday morning? All right, let's do this, guys. Let me hit. I'll ask Chandler. He's supposed to do the YouTube pre-market prep tomorrow morning. I think he kicks that off at like 6:45 a.m. Eastern. Let me reach out to Chandler, see if he wants to swap. And if that is the case, you can expect me to be live tomorrow morning on YouTube, and we'll do some pre-market prep. And if there's anything I wasn't able to answer for you here today, more than happy to do that tomorrow morning. So I'll touch bases with him. But for now, guys, I got to hit the road, handle adult business, all those responsibilities, obligations, and it makes you wonder why we were all in such a hurry to grow up. But I hope you all have a good night. I appreciate your time. Tomorrow, got your level to the upside, got your level to the downside, and you got some context here of what's all taking place on the bigger picture chart. All right, y'all. Be safe tomorrow. Trade well. I'll talk to you soon. Always, always, always appreciate the time.